Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving deep into the world of cryptocurrency and decentralized finance, better known as DeFi. Now, I know crypto can feel like a moving target. One day it's Bitcoin making headlines, the next it's Ethereum staking or some new NFT project that's grabbing attention. And behind all that noise, there's this whole universe of DeFi protocols changing how people think about money, lending, and ownership. So, in this episode, we're going to break down three big topics: a detailed Bitcoin analysis, a complete look at how to stake Ethereum 2.0, and an honest overview of where the NFT market stands today. On top of that, I'll walk you through a crypto lending platform's guide, because if you're holding digital assets, you should at least know how those assets can work for you. And don't worry, I'll make sure we cover both the opportunities and the risks so you can approach this space with clear eyes and confidence. Let's get started. Segment 1: Bitcoin analysis. First up, Bitcoin. It's still the anchor of the crypto ecosystem, the digital asset that sets the tone for everything else. But Bitcoin in 2025 isn't just about price swings. It's about legitimacy, macroeconomics, and adoption. Here are the main forces shaping Bitcoin today. Institutional integration. This is huge. Bitcoin has moved far beyond being something retail investors trade on an app. Pension funds, sovereign wealth funds, and even insurance companies are getting exposure to Bitcoin through exchange-traded funds, ETFs, that regulators have finally approved in major markets. Billions of dollars are flowing in, and that brings a kind of legitimacy that simply wasn't there 5 years ago. Macroeconomic conditions. Bitcoin doesn't exist in a vacuum. It reacts to global economic forces, just like gold or stocks. Inflation, interest rates, and currency strength play major roles. In times when central banks loosen monetary policy and print more money, Bitcoin historically rallies. But here in 2025, what's fascinating is how resilient Bitcoin has been, even during periods of monetary tightening. And when currencies like the yen, pound, or euro weaken, a lot of that capital flows into Bitcoin as an alternative store of value. On-chain data. This is one of the unique things about Bitcoin. You can literally see what's happening on the blockchain. And what we're seeing now is long-term holders accumulating and exchange reserves dropping. That means fewer coins are available for trading, which creates supply pressure. Historically, that kind of activity has set the stage for new bull runs. The halving narrative. Every 4 years, the Bitcoin block reward halves, making new supply scarcer. The most recent halving has already happened, and history suggests that halvings usually precede major bull cycles. So supply is tightening while demand from institutions is increasing, a recipe that could be very bullish over time. Regulation. And finally, regulation. A few years ago, Bitcoin was in this gray zone where governments weren't quite sure how to handle it. Today, frameworks are much clearer. Taxation, custody rules, and trading regulations are more established, especially in developed markets. This gives institutions more confidence to participate, which feeds into adoption. So, the takeaway? Bitcoin is still volatile, but its long-term identity as digital gold is stronger than ever. Traders should keep an eye on ETF flows, interest rates, and on-chain supply dynamics when making decisions. Segment 2. How to stake Ethereum 2.0. All right, let's shift to Ethereum. If Bitcoin is digital gold, Ethereum is the world's decentralized computer. And with its transition to proof of stake under Ethereum 2.0, staking has become one of the most important ways to participate in the network and to earn yield. So if you've ever wondered, how do I stake Ethereum 2.0? Let's walk through it. What is staking? Instead of relying on miners, Ethereum now secures its network through validators. Validators lock up ETH, meaning they stake it, to process transactions and keep the blockchain secure. In return, they earn staking rewards. It's greener than proof of work, and it gives ETH holders a way to earn passive income. How can you stake ETH? There are several methods. Solo staking. This is the purest approach. You need 32 ETH, plus the technical skills and hardware to run your own validated node. It's the most decentralized method, but it's definitely not beginner-friendly. Staking as a service. Some companies will run a validator for you. You provide the ETH, they handle the setup. Of course, they charge fees, and you're trusting them to operate correctly. Staking pools. These are much more accessible. Platforms like Lido or Rocket Pool let users with less than 32 ETH join forces to collectively stake. Pools make staking open to more people. Centralized exchange staking. This is the easiest method for beginners. Big exchanges like Coinbase or Binance let you stake ETH directly through their platforms. But the trade-off is custodial risk. Since they control your keys, you're trusting them with your ETH. Liquid staking derivatives. This is where it gets exciting. Services like Lido issue tokens such as STTH that represent your staked ETH. You can then use these tokens in other DeFi protocols for lending or yield farming while still earning staking rewards. It's like putting your ETH to work twice. Expected rewards. Right now, staking yields are between 3 and 6% annually, depending on network activity. Not bad compared to traditional savings rates. Risks. But staking isn't risk-free. Validators can be penalized or slashed for misbehavior. Staking pools can be hacked. And centralized platforms can fail, as history has shown us. The smart approach is to diversify, maybe some ETH in a pool, some with liquid staking, and maybe a little on an exchange if you trust them. That way, you spread out risk while still earning. Segment 3, Crypto Lending Platforms Guide. Now let's move to one of the most exciting parts of DeFi, lending. If you've got crypto sitting idle, why not earn interest on it? Or if you need liquidity but don't want to sell your holdings, why not borrow against them? That's where lending platforms come in. Here's your crypto lending platforms guide. Centralized lending. This is SoFi, centralized finance. Companies like Nexo act as intermediaries. You deposit your crypto, they lend it out, and you earn interest. It's very user-friendly, but the trade-off is custodial risk. We've seen what happens when centralized lenders collapse. Decentralized lending. Then there's DeFi, decentralized lending. Protocols like Aave, Compound, and MakerDAO let you lend or borrow peer-to-peer using smart contracts. There's no middleman. It's transparent, often offers better yields, and you maintain more control. The downside? You need more technical knowledge, and you're relying on code not to fail. How lending works. The basic idea is simple. Lenders supply crypto, ETH, stablecoins, whatever into a pool. Borrowers put up collateral, usually worth more than what they borrow. Interest rates adjust automatically based on supply and demand. Why people use lending. Passive income for lenders. Liquidity without selling your crypto for borrowers. And in DeFi, you can often use the tokens you receive from lending in other protocols, compounding your returns. Risks. Smart contract bugs can drain funds. If your collateral drops in value, you risk liquidation. And of course, regulators are keeping a close eye on lending, which could impact how these platforms operate. Pro tip. If you're new, start with a trusted centralized service or a top DeFi protocol with a proven track record. Then, as you gain confidence, you can experiment with advanced strategies like recursive lending or combining lending with liquid staking derivatives for higher yields. Segment 4, NFT market overview, and finally, let's talk NFTs. Remember the hype cycle of 2021? When pixelated JPEGs were selling for millions. That frenzy has cooled, but NFTs aren't dead. Far from it. They're evolving into something more practical. Where are NFTs now? Art and collectibles. Blue-chip collections like CryptoPunks and Bored Ape Yacht Club still hold cultural cachet. They're often used as digital identity markers, like your online status symbol. Gaming and metaverse assets. Projects are building in-game NFTs, land, skins, weapons that players truly own. Games like Illuvium are pushing that boundary. Music and intellectual property. Musicians are releasing NFT albums, selling tokenized royalties, and giving fans ownership stakes. This is disrupting the traditional streaming model. Real-world assets. Perhaps the most exciting development, tokenizing real estate, luxury goods, and even bonds. This could connect traditional finance with blockchain in a powerful way. Challenges. NFTs still face speculation fatigue. Many are liquid, and regulators are still figuring out how to classify them. But the direction is clear. NFTs are evolving from speculative hype to functional digital ownership. Segment 5, Tools and Resources. Before we wrap up, I want to share 2 resources I think are absolute must for anyone serious about trading or investing in this space. First, Crystal Ball Markets platform. This is a world-class, cutting-edge, user-friendly trading platform app. It's designed for traders at every level. Whether you're just starting out or already a pro, it gives you advanced analytics, speed, and a smooth interface. If you want to step up your trading game, I recommend giving it a try. Second, the Crystal Ball Markets podcast. This one's close to my heart because it's exactly what I wish I had when I started out. It's a beginner-friendly podcast covering trading, investing, macroeconomics, and financial markets. They break down complicated topics in plain English. If you're serious about growing your knowledge, definitely subscribe and listen regularly. Closing thoughts. So, where does all this leave us? Bitcoin is becoming digital gold in a very real sense. Ethereum staking has unlocked a reliable source of yield. DeFi lending is reshaping how we think about credit and liquidity, and NFTs are evolving into a new layer of digital and real-world ownership. There are risks, yes. Volatility, smart contract bugs, regulatory uncertainty. But there are also massive opportunities if you take the time to learn, to diversify, and to use the right tools. Whether your focus is on learning how to stake Ethereum 2.0, exploring the crypto lending platform's guide, or just trying to understand NFTs, the important thing is to stay engaged and keep building your knowledge. Because this space isn't slowing down. That's it for today's episode of Financial Market Insights for Traders. I'm Sophia, and I hope you found this deep dive into crypto and DeFi helpful. If you enjoyed the show, make sure to subscribe, share it with a friend, and leave us a review. It really helps us reach more traders like you. Until next time, stay informed, stay cautious, and stay curious.